Hello friends and welcome. It's Regal Smith here and I am super excited to teach you about all the benefits of being a doTERRA wellness advocate and how it's actually going to save you a ton of money at tax season because you are a business owner. So welcome to my car. My little baby fell asleep, so I took advantage of this time in a quiet vehicle. So when you are a business owner with doTERRA and you are earning an income, what happens is you are able to now utilize business expenses. So over 98% of tax law was written for you. It's written for business owners. So when you are an employee, what happens is you are taxed on every penny that you earn. When you are a business owner, what happens is you earn, you spend on appropriate business expenses, and that remainder after you're spending for business expenditure is what you're taxed on. So when you know how to utilize your deductions, you are going to save a ton of money on your taxes. So let's make this super simple. How do you know if you have a business? Well, IRS.gov, they say that a business versus a hobby, a business would be something that the time and effort put into the activity indicates an intention to make a profit. I would say most of you wellness advocates sharing doTERRA have an intention to make a profit. And another super common question that you'll hear frequently is, hey, what can I deduct? And we are going to cover a whole list of things that you can deduct. But the IRS has a very vague statement which works in your favor, and they say to be deductible, a business expense must be both ordinary and necessary. An ordinary expense is one that is common and accepted in your trade or business. A necessary expense is one that is helpful and appropriate for your trade or business. An expense does not have to be indispensable to be considered necessary. So what that tells me is things that are ordinary and necessary to grow our business are wide and vast in network marketing and within doTERRA. So there is a huge amount of things that you can legally and ethically deduct from your taxes. So I'm going to share with you my 5 best top tax tips. I am not a CPA. I do highly recommend that you communicate with a good CPA for tax tips for you. I am a doTERRA Blue Diamond Wellness Advocate who would have the potential to have a very high tax liability if I did not utilize these. So this is something that my accountant has talked to me about, and I'm sharing this with you. So please chat with a qualified CPA for specifics on your situation. So number 1, embrace that you are a business owner and open a business bank account. So this is going to make tracking your expenses super simple. It's going to be an account specific to your business. Now, if you don't have a business entity, a business name yet, don't worry. You can set that up at a later time. We'll talk about that in a moment. But you can set up right now a business account that is separate from your other spending. You can even set it up as a DBA, which is doing business as. And you can start to channel all your expenses and earnings through that one account. You're going to want to set up your doTERRA direct deposit, your checking, right in to this account. And then we're going to track all of our expenses going out, which I'll talk about in a moment. Tip number 2 is to open a business credit card or debit card attached to that account. So all of your expenses that we'll talk about in a moment, you want to make sure that you're tracking them. And when you have electronic documentation from either a credit or debit card, it is super, super simple. One thing I'd like to remind you of is being an excellent steward of your money and paying that off every month if it's a credit card. So the great thing is you can utilize the credit card company where they give you free points and mileage or whatnot for your spending, paying it off every month, tracking your expenses and getting the rewards from that credit card company. Now you want to select a bank that has electronic banking. I believe almost all, if not all, have electronic now, and that will make it simple when we itemize our deductions. So at the end of the month, you can export your statements, so all of your spending, into an Excel spreadsheet and very simply go through and tack on the categories of deductions that we'll talk about in a moment. Tip number 3, You want to open a separate savings account for your taxes, completely separate from your business account or your personal checking, your personal savings. And every time that doTERRA check hits your inbox in your business account, to automatically transfer a percentage into that savings account. Now, that amount varies for each situation. A great place to start is around 20% would be a great place to start. I like a lot of cushion. We do 20 to 30%, and that's still far more than what we need and far less than what we'd be paying if it was employee earnings versus business earnings. Tip number 4, hire an excellent CPA. There are so many out there, but a good CPA will be able to give you specific guidance on your situation and save you way more than you would spend on their services. They're also free to interview, ask questions. They do charge you when they file and prepare your taxes, but you can interview them for free. They're going to help you be able to decide if you should set up a business entity. Should it be an LLC, an S Corp, a C Corp? Those are all pretty specific to your earnings, and I know for us, we started as an LLC, and then as our income grew, our CPA was naturally able to transition it to different things like an S Corp or a C Corp, things of that nature, and it was really seamless. So I often get asked, should I file my business under my personal Social Security, or should I do it as a business name with an EIN, which is like a business, it's like a Social Security number for your business. And that, once again, is up to you and your CPA. The general guideline, which I learned from Corey Lindley with doTERRA, is once you're making $10K a year with doTERRA, you want to have a business entity set up. Now, if you're making more than that and you haven't set one up, that's okay. There's still plenty of time to set it up, but it's good for a liability perspective, and it's also good for an IRS perspective as well. So to set up a business entity, it's super simple. Basically, you pick the business name you want. And here in Colorado, we go to the Secretary of State website for Colorado, and I can there register an entity name. So it's a business name. It's a $50 fee one time, and then $10 every year to maintain. And then I have an LLC name that we use. Once you have your entity name, then you can register for an EIN if you choose, and that's at irs.gov. It's totally free. It's basically that Social Security number for your business. So if you already have your doTERRA business account up and running, it's a super simple switch once you're ready to switch. So if you're making $10K or more a year, or you just feel like you want to make a switch, you can get with member services or your account manager and fill out a really simple form that just has you transfer your personal account into your new business name. Super simple. You keep your same wellness advocate number, and the only difference is at the end of the year, your 1099 is sent to your business name versus you personally. Now, tip number 5, know and utilize your deductions. This is where the magic happens with home-based businesses. I wish that everybody understood some of these basics because everybody would want to have even a very part-time home-based business if they understood this portion. So I'm going to share with you the categories that I personally use for our business, and most of these will be relevant to you, and you can mix them up with your CPA. So each month, this would be best practice, is to export that statement from your bank of your spending from your business account, and it's going to show you the date, how much you spent, and where you spent it. And then you can create one other column, and right there is where I go through and plug in these categories. That's it. It's super simple. And then on that spreadsheet, you can sort by expense category, so all your marketing will add up, all your meals will add up, and at the end of the year, I just bring it to my accountant and say, here you go. So we're going to keep it as simple as possible. So number 1, doTERRA products. anytime I spend with doTERRA, I am tracking those expenses. Your LRPs you can write off, not necessarily at 100% because some of that is for personal use. So we write off between 80 and 90% of our LRP. And you don't have to track, price per drop with your samples, anything like that. We do it as a percentage. So this percentage, we're going to write off 80 to 90% for us personally. And we tell our accountant that this X percentage was for marketing and this X percentage was for incentives, like when people hit ranks or a gift. Not necessarily, a gift's different, but something I give somebody when they achieve their goals or make a certain purchase. So one category is just doTERRA. The next we have is marketing. So marketing is probably our largest expense. When you think about us as network marketers, think about all the things we are doing in our life to market and grow our business. It's pretty vast. So some of the larger things that you might think of for marketing, of course, are booths, our events, anything we order from Aroma Tools, if it's marketing like little sample vials or handouts to give people, if it's things to put on our display table, nice wood and oil boxes, things of that nature. It could even be your webinar and Zoom fees. So I have a separate category for internet marketing, but if I have Zoom fees, webinar fees, things of that nature, I put that under internet marketing. Your business cards, things that require you to be out and be socializing and meeting new people. Now, clothing is something you might want to write off, but it can only be written off if it has the doTERRA logo. So that one's pretty specific. So we know we need to look good, present ourselves in a manner as such, but only if it has the doTERRA logo can you write off your clothing. Another thing too, think about the food that you make for events. So are you making peppermint brownies to market your peppermint essential oil? Think about that. Are you purchasing almond milk to make trim shakes to share at one of your next events? So start to think about all of those. So we lump those under marketing. We have another category for incentives. So these are team specific. Maybe they're retreats, team building, things when people achieve a certain rank that they get as an incentive. Another category is office supplies. So anytime I see something from, a lot of things from Amazon for us, so our printer paper, envelopes, bubble wrap, mailing supplies, paper products, anything you would find in an office, we're writing those things off. Travel. Travel is a huge category. For us, we hardly have any personal travel expenses because they're related to business. Every time we go somewhere, we are teaching classes, we are sharing oils. It is oriented to grow our business. These are things like the doTERRA incentive trip. These are also things like, flying to Washington to share oils at your sister's house when you're having a launch event there. So think about all the places you go. You can write off your hotel, your airfare, rental car, the gas for your rental car, tolls, parking. The doTERRA incentive trip is a must attend and easily tax deductible item for you. Entertainment. Entertainment is another category. This can be written off at 50%. Once again, I have a great CPA, so I just tell him that's how much we spent on entertainment this year, and he knows that he deducts it at 50%. So these are things that are deductible when there's a clear tie to particular work. So if you're entertaining some out-of-town business prospects, or maybe after leadership you take a team to the aquarium or different things like that, that is a deductible expense. Education and training is another great expense that you can deduct. So this includes your Audible subscriptions, your books that you purchase from Amazon or wherever you purchase books to do personal growth and development. These are things like your leadership tickets, convention tickets, Magazine subscriptions, so think about, are you subscribing to Success Magazine? That's a deduction. Seminars, so any personal growth seminars that you want to learn how to develop and expand yourself, could be a education and training expense. Meals, once again, 50% of that can be deducted. So give your accountant the total and they know to make it 50%. So when a business is discussed before, during, or after a meal, while you're on your business trips or even in your own backyard. So if I think about the meals we have, we almost always are having meals and doTERRA comes up. So this can be with my husband and we're talking about how we can expand a certain part of our business. This can be with our business partners who become best friends. So when you go out to a tea or a lunch, it oftentimes the purpose becomes business oriented as well. So those are deductions that you now can write off as a business owner. Shipping, anytime you stick something in the mail, shipping, you can write that off when it's for your doTERRA purposes. So samples, leader gifts, welcome packs, customer appreciation, etc. Events is another category. So if we have room rental fees or anything of that nature, so anything that's related to a large event. And a nice note is if you're catering an event, you can write catering off at 100%, but once again, the meals are only 50%. Home office. So home office is one of the stricter deductions, so definitely check out irs.gov, talk to your CPA to see if you qualify. If you use a room in your home specifically and exclusively for business, you can start to write things off. You can write off a portion of your utilities, HOA, mortgage, things of that nature based on the square footage or a standard deduction. So it's a pretty sweet deduction if you qualify. You can also write off gifts. So just a gift, maybe it's holiday season, just a thank you gift. It's $25 per person is deductible, so be mindful of the amount. Donations, so every time you donate to a nonprofit, Healing Hands is the doTERRA nonprofit that we donate frequently to, that is of course deductible. Phone and internet services. So all of us have phone and internet for business purposes. We also use it for personal. So you can write off a percentage. Almost all of our phone and internet usage is business. So we write off a very large percentage of that for us personally. You can also write off large ticket items. So this wouldn't necessarily be categories, but you could write off things like a computer, a new iPhone, home office furniture if you qualify for home office, printer, phone, I had already mentioned, iTovi, that nice scanner that you can use for essential oils and things of that nature, and your accountant will be able to appreciate it over several years for you. Another huge one to really be mindful of is your mileage. So tracking your mileage adds up significantly. It's just over 50 cents a mile that you can deduct. For us last year, it equated to over $16,000 of a deduction because we were using our vehicles so much for doTERRA usage. So this was when we went to the grocery store to get supplies for peppermint brownies, when we are driving to events, when we're meeting with our leaders for tea to discuss how to grow our business. It starts to add up when you're really mindful of it. So there are old-fashioned ways like a notebook, or you can get more sophisticated like an app. There's tons of apps. A really popular one I hear about is Mile IQ, which will actually cue you when you get in your car to say, hey, is this business related or personal? So it's a nice way to have that log already created at the end of the year. So these are some of my basics. If you really are excited to learn more about this topic, there is a book called Tax-Free Wealth. It's by the Rich Dad, Poor Dad Advisors, and CPA Tom Wheelwright wrote it. And he will just teach you how to legally and ethically decrease your tax liability significantly. as a business owner. So there's lots and lots of rich content in here. So if that excites you, read it. Otherwise, just know the basics. Open a business bank account. Get a credit card or debit card associated with that account. Track everything that goes out. doTERRA tracks what comes in for the most part. You get a 1099 at the end of the year. Have a savings account for your taxes. Hire a good CPA. And know and utilize your deductions. I will post this in our Facebook community so that you have my personal handout and some categories. And keep it super simple. Tax season can be a breeze, be simple, and actually save you way more money than if doTERRA wasn't in your life. So thank you for watching. Have a wonderful day, and we will see you next time.